All right, now you guys should hear me. Sorry about that. I got to push this stupid little buttons. All right, so what's going on? Kind of a dud day today. Not too much going on. Um, what it appears to be like now, right, with the VIX kind of pulling back, it just seems like it was what we initially thought, which was the uh, New Year jitters, right? So they went out, they got some options, they hedged their positions, that created that volatility. Um, that's what it looks like for now, okay, in terms of the VIX. Now we're going to look at the rest of the market. I haven't had a chance to look at it, so let's look at it together. All right, so we had that drop right here in the equal weighted S&P and then popped right back up. All right, so now the equal weighted S&P is up 1%. Dividend weighted, the same thing, kind of popped back up, but this looks a lot uglier, right? Not as pretty. The NYSE popped back up right up towards that new all-time high up there. Megaphone structure. Perhaps we can change this up now. Maybe this looks a little bit better. Okay, so that's a rising F flag now. Dow Jones kind of broke down, popped back into structure. And this happened yesterday, by the way, when it popped back into structure. So not surprising that it pushed up higher today. The S&P, same thing, broke down a couple times, then popped back up. The point of control remains at the same point, more or less. NASDAQ, all right, back into structure. And this is what we said would happen yesterday. This is where we left it off. Let me put it in a smaller time frame. So yesterday we thought we would have a little bit of a deeper pullback from this structure here, perhaps down to this previous high, and then bounce. And we started to get the drop right in here. I still didn't put my drawing tool on. We started to get the drop, right? But then it started to bounce when the ISM numbers came out. Now remember, ISMs are it's a survey. Okay, so the manufacturing survey of the producers, and it's, to me, it doesn't mean a whole hell of a lot. Okay. Anyway, we got that reversal, abrupt 1, 2, 3 up. Now what it appears to be doing, and let me get all this ugliness out. But again, we proved the point that the buys were still to the upside so long as we remained above the previous high. So let me get rid of all this now. Okay. So what are we looking at now? Well, we have the thrust down move. Okay. And this is what I was talking about yesterday about liquidation breaks, right? You don't know if it's a liquidation break or something much deeper. And with the VIX as high as it was and continuing to rise, it kind of makes you wonder, right? And then you start looking at the entire market, and you had a lot of setups that could have started breaking down. Today they didn't break down, obviously. Okay, so again, the bias is still to the upside, but you still have this bear flag now to deal with. All right, still have the bear flag. So anything below this trend line here, okay, starts doing something like this, that would be the next wave down. Then you can short it. But for now, oops, where did this guy come? But for now, the bias remains to the upside. Okay. Again, it's about risk reward, right? So if it were to come down here, could you take it long? Yeah, sure, you could do that because you know where your stop out is. It's well defined. Okay, it's up to you what you want to do with it. But again, this is a bear flag, and it's well defined with a ABC, right? First candle trend move is this 1, 2, 3. So it's well defined. This is a valid structure. And again, the bias is that bear flags break to the downside, but we are in a particle market, so keep that in mind. All right. All right. Small caps. We had the we had the 1, 2, 3 down. We had a valid structure, right? Now it's breaking just above it. That's bullish. It's holding. So look for this one to break to the upside so long as it remains above it. This also looks kind of like a little bull flag. All right, so that's bullish. So that means risk on. So we put that in the bullish category. Transportation started to pop here. Not as strong as I would like, but they did pop. IPO. Um, this thing keeps moving. There we go. IPO started to break down. Okay, it didn't bounce as we expected. So let's see how this is going to hold. Um, this is so strange. Okay, so it broke down a little bit, and it can bounce from here. Okay, ARC still looking okay. The fangs, they're still stuck in the middle of nowhere, so no resolution there. Europe is pushing higher. UK is pushing higher, so they're still looking good, right? Germany is looking good. Denmark is looking good. World Stock Market Index is still within the structure. Ex-US is still looking good within the structure. Airlines a little bit of a bounce today, okay? So keep an eye on these. If they start to break out, you can take it to the long side. China. China breaking out so incredibly bullish. It's still in a bearish structure, right? 1, 2, 3 up. Eventually this will correct, but it's kicking ass. So long as it remains within structure, it goes higher. CQQ pushing higher, new all-time highs, and that's the fangs of China. Nifty 50 is pushing a new high. Japan kind of funky looking. Taiwan kicking ass. Cosby's really kicking ass. Saudi still hasn't made a decision to break out. Australia's holding on for now. Brazil sideways. Emerging markets overall are kicking ass. Okay, they're looking fine. BRICS bullish. All right, we'll skip this one. Real estate is testing the key area. If you want to go, long real estate, this is the time to do it. Okay. This is now valid, so we can turn that into red. It's really funky looking. It's a weird kind of structure. There's going to be some supply that's going to come in at some point in the next several months. I don't know what that's going to do to prices. I don't know what that's going to do to, what's going to happen with interest rates rising. We'll look at interest rates here in a minute. Financials, they're pushing higher. Okay. Oil hit 50 today. Okay. Hit 50. It's right now at 49.9. Now, usually when it hits these big round numbers, keep in mind that it usually goes through it. Okay, it goes like 52, 53 or whatever, and then starts to reverse back down. So keep that in mind. Gold kicking ass, continuing to push higher. Silver is pushing higher. Commodities overall just going incredibly bullish, right? And we've been talking about commodities for such a long time. DBC is the ETF for all commodities. It's testing the long-term resistance area. So look for this one to, at some point, either consolidate somewhere here or start to break out. All right. I would be more comfortable if you started to consolidate within the structure. Did something like this, right, and then broke out. That would be perfect. Precious metals kicking ass. Oops. Okay, nice little breakout. So this is all precious metals, DBP. Base metals going sideways. Look for this one to push higher. Not silver. Steel pushing higher. All commodities are just kicking ass. Palladium's going higher. Copper breaking out. Nice little rising F flag. Okay. There it is. Agriculture, right, pushing higher. Sugar cane pushing higher. Corn kicking ass. Wheat, wow, right? Big fucking move. Soybeans just exploding higher. Skip nat gas. Bitcoin right back up. Okay. So like I said, don't worry about it too much. It's right back up, 34,000. Now I got a question today. Should you be buying now? My answer is no. Okay, because this thing can just turn around, come straight back down, um, and it's hard. Remember that we were buying all the way back here when it was below 5,500. Okay, so for us, it's just if we lose anything, it's going to be profits. But this thing is just bullish as all hell. Again, I expect at some point this year to hit 50. All right. Litecoin doing okay. Ethereum looking good. Forget about Ripple. It blew up somehow. Dollar is pushing pushing lower. Barely made a new low, or just prior to that, right? So remember, dollar down, stocks up. All right. This is the IMF. Okay. The IMF special drawing rates kicking ass. Looked for it to touch the previous high, so we're still looking at weak dollar. All right. Still looking at weak dollar. US dollar Japan made a new low. Okay. Within this trend line made a new low. Structure, not trend line. Euro pushed higher. We were saying this yesterday, right? That this had to push higher. It did. So that's looking good. Great Britain pound USD. Still didn't push higher today, but that slow kind of grindy little moves to the upside is just fine with me. Skip that. Dollar Turkish lira. Like we said, this was going to correct. It's doing exactly that. That's good. Dollar ruble sideways. USD CAD. USD new low against the CAD. Down to 126.71. Wow. Australian dollars pushing up really nicely. Again, I don't know how many times I said you can buy and hold this one for the long term. Same thing with the New Zealand dollar. Peso doing nothing. Okay, but it is towards the low. And dollar won. Okay, pushing lower. The Euro index, we were talking about this breakout. It's doing it in a nice little rising F flag. So nice and bullish. 10-year. Dollars, don't you think is going back up soon? No, I don't think that. That's something that, what's his name? This guy Steve, whatever, Bond King or whatever, he keeps saying this. Whoa, look, there's so many people against the dollar, and there's so many. Don't remember, these are part of a portfolio, right? So you have an entire portfolio, and you decide how you're gonna execute your trades. So you'll go short dollar, long stocks, okay? And if something were to change, then what you would do is unwind it, right? So you would start selling stocks or shorting them, and then buying dollar, right? So this thing that people have with the sentiment charts and look, the commitment of trade and blah blah. They draw conclusions as if like it makes a big deal. It doesn't. It's part of a portfolio, right? Okay, I get the part that it's at an extreme. I like extremes. I like those indicators during an extreme, but only as a small piece of the pie, right? You're not going to get dollar strength with such a weak economy, lockdowns, money printing, QEing. Okay, it's not going to strengthen unless the market starts to crash, unless the market starts to, realize what the fuck is going on. Now, think about this, that you got interest rates rising on the 10-year, okay, and it's starting to break out here, right there, it's starting to break out, okay, and then you're getting the earnings yield that is falling, okay. Now, this is probably the lowest I've seen it. I don't know if you can see it closely, but it's 2.66. So they're converging. There's a compression going on. At some point, right, that will reverse. Well, when that starts to reverse, then you start um, to buy the dollar because stocks are going to start to sell off, right? So you got to look at the whole picture, and that's why we do these. Go through all what's the message of the market, right? We go through all of these things so we can understand where the money's flowing, what's going on, what is the market telling us. It's not about guessing. It's just about reading what the market is telling us, right? Yesterday we had a good opportunity to break a lot lower and could turn to something more, right? Um, but it turned out to be just a liquidation break. Okay, at least for now. Tomorrow, that bear flag can fall. Everything starts to go, south. Dollar will start to strengthen. So think of it in these terms. Let the markets tell you what to do. Right? Don't guess. And that's what that guy Steve does. He guesses a lot. He puts up a bunch of correlation charts that he thinks are correlated because if you draw it out, if you pull them out, stretch them out, there's no correlation. It makes no sense. So just kind of keep that in mind. All right. All right. So the 10-year, okay, it's up 9.5. We're almost at that 1%. What happens when the cup and handle starts to break out, right? That's why we have this arrow here. That it's going to start to push higher at some point. Aggregate bonds, right? They're not doing anything. It's kind of going sideways. It broke out right in here and failed. Okay, so aggregate bonds go higher, interest rates go lower, and this is kind of going sideways for now. All right. So more or less, that's the message of the market for right now is it's still bullish. They're not sure who's going to lead. It's not going to be the market leaders. Small caps, catch-up plays, they're not really performing right now. Okay, it doesn't mean that they won't perform, but right now they're not performing. We know that Europe is doing really good. Okay, Asia is doing really good. So that's what's driving the market, emerging markets. Well, that kind of makes sense. Why? Because you have a weak dollar. A weak dollar is very good for emerging market stocks. Okay, kind of keep that in mind. Royal Caribbean, Norwegian, they're doing just sideways stuff. All right, let's look at the FANGs. You kind of leveling off here with Apple. It didn't decline today. Amazon is going sideways. Microsoft is holding. Facebook is kind of holding. Netflix holding. Google broke down but no follow through. And remember, always ask yourself, what's it trying to do? How good of a job is it doing? Right? So if it's not falling down in Google's case, right, it's not doing a very good job. It's trying to break down, but it's not doing a good job. So that's a bullish scenario. Keep that in mind. Always ask yourself these questions. Nvidia, right, breaking out again, starting to push a little bit higher. We expect this one to go higher. That's why I put this here. Tesla, right, continues to push towards that 800, 850 area where I expect it to go. PayPal doing really good, holding on for now. Snapchat, that's kind of going sideways there. I think these Snapchat. I think this is a good buy long term. Shake Shack, same thing. These are kind of recession proof. Okay, and Snapchat I think is still very groovy because the younger kids love it. Okay, and they don't like Facebook where all their grandparents are. Right, so Snapchat has some ways to go. All right, and Shake Shack is high-end fast food. It's good. It's expensive. The locations that they have, the people are always going to have money. Okay, so that's why I like that one. It's up 4% for today. That's about it as far as that goes. Market just closed. So, so for tomorrow, all right, and in after hours, and we're going to go with the market leader. Let's kind of zoom in here a little bit. Okay, so we're kind of pushing up against the upper trend line. It's a valid 1, 2, 3 structure. If this starts to break out, right, then you can expect we're going to go start making new highs at some point. Okay. If it starts to reverse, okay, see if it bounces here. Alternatively, if it starts to break, you want to take the short, at least to the previous low down here. Okay. Because then that's going to be a follow through, and expect the VIX to start to rise, and then you will start seeing a lot of these structures that are kind of iffy right now. They will start to break down, just like we saw now with the FANGs, right? With the Googles, with the Facebooks, and so forth. They will start to break down. Transportation will start to break down. Dow Jones, they will start to come down below the structure, start to break for the second time. Usually the second or third time it's going to start to have a deeper pullback. Okay. Overall, I'm going to maintain that as long, even with a correction, if we get it tomorrow, that as long as we remain above this previous high, okay, zoom out a little bit. As long as we remain above this previous high here, okay, we're bullish, we're good. All right. Ideally, you also want to maintain above this black line here. All right. So that's if you can hold the red line, the previous high, and then hold even better above this black line, then you're good to go. Now, why do I say that? Well, if you go back to 2016, right, these areas are kind of dangerous. Okay, why are they dangerous? Because when they start to break out, they're not very convincing usually. So here's what I mean. Look at this. Okay, you come up, you fall. You come up, you fall again. You pop up, you fall. You pop up again, you fail. You pop up, you fail. And then you start to kind of grind in here a little bit, and then you start to take off, and before you know it, you're off to the races. Right? So when you're crossing these special boundaries, if you will, right? When you start crossing these special boundaries, it usually gets very choppy. All right, they're fighting back and forth with it. I don't know why this guy keeps popping. Yeah, so it gets a little bit choppy, and that's why it's so important that you maintain these key areas of previous highs, because it kind of validates that you're doing the right thing. Okay, so you want to maintain above this area here, right in here, and then watch it continue to go higher. That's what you want. Now, the problem with that is that you have a bearish structure. Okay, this is a bearish structure. At some point, this has to correct. Well, that's fine if it corrects, but how much is it going to correct, and how is it going to correct? Because we're going to end up with something bearish, right? And what's the bearishness? This. Okay, see it? This is a bearish structure. It's an F flag. It needs to correct at some point right in here, right? Correct and then continue higher. But overall, this is a bearish structure. At some point, if it's pointing up this way, at some point it has to correct and then starts pushing back up. Okay. But we're not there yet. We're not there yet. I'm not, anticipating something like that. Corrections do occur. All right. But you have two bearish structures within each other. So, you're crossing these, magical little boundaries where you're starting to break out, and it's not doing a very convincing job. And quite frankly, if you look at the fundamentals, we are, nowhere near where we were back here in 2016, right? Now, what are the similarities? Similarities was that world trade was weakening back in 2006, 15, 14, 16. There was a weak global economy, which is the same thing now. Okay, and then it started to increase in price, but the economy was a lot better back then. Okay, and it was a lot more valuable back then than it is today. So fundamentally, this breakout is kind of funky, to be honest with you. All right, it's kind of funky. So keep that in mind. Keep that in mind. All right. Again, with this one, you have that bearish structure in place, right? Starts to fail, comes back into structure. Well, guess what? You're going to have a much deeper pullback. And that's okay. You're still kind of bullish so long as it can hold and start pushing back up. But that's a big fucking move to the downside that you gotta consider. You gotta be ready for it. If it dropped from here, that would be about 10% drop to the downside, at least, maybe more. Right? You don't want to be buying at all-time highs and then watch a 10% drop. You're not going to hold. You're gonna get your ass kicked. Right? You're gonna puke it up. So anyway, keep that in mind. It is a bearish structure. We are at the point of control, just above it for now. Keep an eye on it. If it breaks, take it to the downside. Beautiful little trade. All right. If you're just a perma bull and you can only see things bullish, fine. Fine. Comes back down here, take it to the upside, see if that happens. If not, if it breaks down, stop. Simple. Simple little trades. And that's the point of bare knuckle charting, that it's about risk rewards, where you want to take your trades, right? Contrast that with macro fundamentals. All right. So, all right, guys, that's it. I'll probably be on tomorrow early morning for you guys. Don't forget to come down to patreon.com/RealMacro. If you do an annual package, you'll get a 16% savings now. So come down, subscribe. Don't forget to like and subscribe. And I'll talk to you guys tomorrow, all right, at market open, maybe a little bit before that. All right, thank you very much, and I'll talk to you tomorrow. Bye-bye.